Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And the odds are that you're watching this video because you got an email from me telling you that it's up. Now, if you're not on my free email list, scroll to the description of this video and you'll see a link to join it. And then every single trading day before the opening bell, you'll get an email from me with my market commentary and the top links to news stories and articles I think you need to know about before the opening bell. Now, we're in an interesting moment in the markets. The first 2.5 months saw a sharp decline in the NASDAQ and Bitcoin and things such as the ARK ETF that typifies the speculative areas of the market. And then we had something of a rebound, but that rebound stalled out last week. And I believe now is the time to shift money out of things lagging the S&P 500 and into gold and silver. Now, you see, to beat the market, you want to be in things beating the market. And that's why I use relative strength analysis as a core instrument to decide whether I want to invest in something, trade something, or sell something. And simply put, relative strength analysis is how something is performing relative to the broad market benchmark, the S&P 500. So if something is performing worse than the S&P 500, what it will tend to do is fall more when the S&P 500 pulls back. And then when the S&P 500 goes up, it doesn't go up enough to make up for the weakness on the downside. And this is what's been going on with the ARK ETF and the stocks inside of it now for well over a year, and why these type of investments, I think, should be liquidated and that money put to be use in things beating the market. So let me show you exactly what I'm talking about with some of the charts here. And this is the NASDAQ. And on the bottom, you can see the relative strength plot. It's taking the price of the NASDAQ, dividing it by the S&P 500 to create a ratio. When the ratio goes up, which this was doing until February last year, the NASDAQ was outperforming the S&P 500. Now that ratio peaked and the NASDAQ is underperforming the S&P 500. One of the things that has happened is that many of the big cap tech stocks that had been leaders of the bull market from 2008 till really February last year started to lag. And some of them really fell sharply in January. Facebook crashed 20% a day. Netflix crashed 20% a day. If you look at something such as the ARK ETF, it had a great run in 2020, but ever since February last year, it's badly lagged the market. And when something lags the market, eventually it runs the risk of going into a collapse type situation. And ARK started that after Thanksgiving. It broke down when it fell below 100, and then it fell to 50 in March. It bounced back up to 70 about, so now it's around 60. It's a horrible stock market laggard. And you can see how the relative strength is going down. So if I was in this, I would sell, and I would use the recent bounce we've had in the market as an opportunity to get out. So we saw the market, as I said, have something of a rebound in March, and that rebound ended below the 200 moving average on the NASDAQ. And momentum stalled out last week. And that means now's the time to get out of lagging positions and shift into things beating the market if you want to beat the market. So what's beating the market? Well, the number one thing beating the market is the commodity complex. And this is the CRB Commodity Research Bureau Index. You can see relative strength has been trending up and began to spike up dramatically around New Year's. It didn't just do this once Russia invaded Ukraine. Commodities actually have been going up almost, like this since February last year, while ARK was going down like that. And I think that's going to continue to be the trend now for years, because inflation is an underlying macro element of the global economy. And it has more to do with Ukraine, because if you can think about what happened last year, February of last year, the Federal Reserve, Janet Yellen was saying inflation's coming, but it's transitory. It will go away in the summer. It did not. And by October, we started to hear news stories of record consumer price index monthly annualized gains. And that started in October of last year, months before the invasion of Ukraine. And what's going on is combination of multiple macro factors all put together are causing this inflationary trend. It's very similar to what's happened in the 1970s. Look, all the money printing, the budget busting of decades culminated with quantitative easing operations and interest rates being cut to zero in 2020, when the stock market dumped ahead of the shutdowns. And that's all inflationary. And the thing is, we had a global historic all-time low secular bottom in the bond market in 2020. And now, as interest rates are going up from a secular low, bonds are going down in value, and rates are not going up fast enough to stop inflation at all. So this is just going to continue, much like what happened in the 1970s. In the 1970s, the best things to invest in were real estate, commodities, energy stocks, and gold and silver and mining stocks. So if we think of a stock such as Zoom, which is one of the stocks that fascinated people in 2020, now it's a complete total disaster, trading below the 50-day moving average and way below the 150-day moving average and the 200-day moving average. And now they're going down like that. That's my definition of a bear market. That it will take a long time before Zoom gets above those moving averages. And many stocks, in fact, never will, that are in this sort of situation. Compare Zoom with something like Newmont Mining, which made an all-time new high last week. Newmont Mining, which I own a position in, is the largest big cap mining stock in the world. So it attracts institutional money flows among money managers and big money people that want to invest in a mining stock that will profit when gold prices go up. I also own Barrick Gold. It didn't go to all-time high, but it's in a sharp uptrend. Compare something like Barrick to something like NVIDIA, which topped in November, bounced, and now is almost close to its February low. You want positions in things in steady uptrends, not things that pop and go bloop like that. No, unless you want to day trade and catch such moves, like you're a crypto guy trading crazy coins. But I like to buy things that are that have fundamental macro reasons for why they're going up, pay dividends when it comes to stocks, and so forth. And energy stocks also trending up. And you can see relative strength in Exxon, which I also own a position in, going up. I pointed out a stock, I think it was last Sunday, that I also own, that kind of combines all these trends together. That is Gladstone Land Corporation. And I said it was a potential breakout candidate. It broke out on Friday, up 8.73%. It is the largest publicly traded company that owns farmland in the United States, and it pays a dividend from the farming operations. So if you want one company that's all about benefiting from inflation, the rise in commodity and food prices, and pays a dividend, That's it. I would rather buy something like this than something like this. This is Bitcoin, and the Bitcoin relative strength peaked out last year in March, and Bitcoin, fell with the stock market from Thanksgiving to recently, bounced back up into the 200-day moving average, and it just trades with the stock market. When the NASDAQ goes up, Bitcoin goes up more, but when the stock market pulls back, Bitcoin crashes. So you can see when the stock market pulled back in March 2020, Bitcoin went down over 70%. And it went from 70,000 to 50%, basically from Thanksgiving to January. It's extremely volatile. It's sort of like buying a call option on the NASDAQ. So when it's an instrument of speculation, not diversification, not safety, and so forth. And that's the biggest problem investors now have in this market. It's not so much what Bitcoin's going to do or the ARK ETF is going to do, but the bond market, because when interest rates go up, bond funds go down. And because rates were zero in 2020, it's like bond funds have nowhere to go but down. And people tend to think, oh, I'll park 40% or 50% of my money in bond funds, and that's safety. But we're in an environment now where it's not safety, and you don't even make as much money as the rate of inflation. That's why gold and silver are in the position they are, because they're alternatives to owning, CDs and bonds that aren't matching inflation and are going down in value. So we're in an interesting moment when it comes to gold and silver that look to me like they are likely to go up and have another run at some point soon in the next couple of weeks. Could happen next week, could be a month, but it doesn't matter. Gold is trading now with support at 1900, resistance at 1950. You can see the trading pattern is spiked up and it's holding the gains. Silver, similar situation, trading right around 25, support, let's say 23.5. So you can get into these and you're risking a very small amount, not even 5% on silver, and you got a great trading entry point for something that's likely to go up for years and is beating the market now, is likely to continue to beat the market going forward. So we're at an interesting juncture. And when I say sell things lagging, get out of ARK, get out of those type of stocks that don't do it, get out of Facebook, get out of NVIDIA, get out of Netflix, get out of these things, get out. It's not simply so you can not lose money, when the market drops and they drop more, but so you can get in something that's going to beat them, that's going up in a position to make you money. That's what I'm about. So the NASDAQ 100, the triple Qs, as you can see, it jumped up, in March, sharply straight up, and then it peaked right at the 200-day moving average. It's at 350. I hope it bounces here. I think it can bounce up to 360 or 365, but we'll see, but if it does bounce up there, it's just an opportunity to get out because it's lagging. It's lagging the S&P 500. What's helping S&P 500 is a lot of energy stocks are going up that S&P has. Newmont's in the S&P 500. Newmont's not in the NASDAQ. That's a mining stock. Real estate stocks. RWR is an ETF I own. It's a REIT. Real estate investment trust fund, and it's outperforming the NASDAQ. So we're in an interesting moment. I think the bounce of the market is for something that people should take advantage of now by taking money off the table and shifting into better things. The problem is that most people don't do this type of analysis. What you're seeing right here is my Robinhood account. And the problem of Robinhood is when people log in, look what they show people, discover ways to invest. And the first thing they show is crypto coins. they're literally promoting crypto coins, encouraging people to put money into the most speculative things in the market instead of things that they should be buying that could get them more steady returns. So I own in this account Newmont, SLV, that's a silver ETF, IAU is a gold ETF. This is just a small account that I got to play around with and, you know, use Robinhood myself to learn what it's like and see what other people in it are doing. And the thing about it is they show you the 100 most owned stocks: Tesla, Apple, AMC, Sundial, Amazon, Meta. And I go through this list and I don't see a single. Newmont's not on the list. Barrick's not on the list. SLV's not on the list. Not a single gold stock, mining stock, or SLV or GLD or IAU metals ETF is on the list. Not one. And if you have the mentality of a meme trader, you know that it's all about getting in first. It's like a meme trading is like pyramid trading, right? You want to be first. If you're last, you're a bag holder. Well, if you want to be in early, you want to be in things that aren't on this list: gold, silver, mining stocks, not on this list. Think about that. So these are my thoughts for this week. If you like this type of content, you want more, hit the like button. That way YouTube will know to send it out to other people and we can help other people get into better things than they're already in. And if you want my next video, hit subscribe and then hit the bell and YouTube will send you an alert as soon as the next video is up for you. So let's see what happens this week. Going to be an interesting week for sure.